Thanks for the introduction. A very exciting time for Calibre. 2025 is set up to be what is expected to be a transformational year for the business as we develop and start production at the Valentine Gold Mine, which I think if many of your audience knows, it's located in Newfoundland, Canada. That was because we acquired the asset from Marathon Gold in January of 2024. So I will be making some forward-looking statements. Please take the time to go to our website and read some of that information. A quick snapshot of what Calibre is and what we're about. I think Arlen introduced it pretty well. Calibre's been a growing gold producer, and in 2024, we produced 242,000 ounces of gold. 2025, we've given guidance of 230,000 to 280,000 ounces from our Central American assets as well as our Nevada assets. Importantly, that does not include the Valentine Gold Mine in Canada. We have not given guidance to include Valentine yet as we're developing the property. We've been guiding the market that we'll have first gold in Q2, and then likely at that point in time update the market with the inclusion of Valentine into our guidance. But needless to say, obviously you can imagine that based on the feasibility study you can see in box 2, 195,000 ounces a year for the first 12 years of the reserve life. Given that it's approximately half a year of production, there'll be a ramp-up phase through that period. We should be somewhere between 50 and 100,000 ounces if all goes according to plan here over the next few months. But exciting times. Calibre's in a great position. We've got 186 million in cash and restricted cash. We're in a great position to get through the initial capital cost, get into production, ramp that up, and have this multi-jurisdictional, multi-asset gold producer and a growing profile of production. What's also important about Calibre is that, and part of the reason why we've been able to be so successful is we continually reinvest operating cash flow back into the business. You can see in the bottom center box, we've got over 200,000 meters of drilling this year between Central America, between Nevada, and Valentine in Newfoundland. Valentine in Newfoundland is going to see the largest pure exploration program that property has ever seen, and it's staggering because there's been about 350,000 meters of drilling in the Valentine asset prior to Calibre, but interestingly enough, only about 10% of that drilling has been earmarked for discovery, and so that's incredibly important as we talk a little bit about Valentine. The exploration potential is massive, and we put out some results in November 25th of 2024. We discovered a brand new zone outside of resources, outside of reserves. You can see there highlight intercepts, 172 meters of 2.4 grams, 95 of 2 grams, 78 of 2.3. It's important to note that this area, and I'll talk about it, had never had drilling before. So, and that's like a lot of the overall 250 square kilometer land package has not had a lot of drilling on this property in terms of pure exploration drilling. So no drilling was in this area. We've since followed up on that and had some new results earlier this week. So what does this do for us now? Arlen mentioned we've got a $2.5 billion market capitalization. Calibre has 11 mining analysts, and we appreciate all of the groups that cover us: Bank of Montreal, Haywood Securities, Canaccord Genuity. There's 11 companies that cover us, so we appreciate everyone's support. Most companies, if not all of them, have a buy target and higher target prices in their recommendations. So we do appreciate all the support there, and that's evident. As Arlen mentioned, we've got great liquidity. I think yesterday we traded 11 million shares at $2.95 Canadian. So good trading liquidity, good research coverage, and good institutional ownership for Calibre. But the team has got a track record. I think that's also important in highlighting the company. Darren Hall, Chief Operating Officer of the business. For those of you who don't know, Darren was involved in a previous company that our chairman, Blaine Johnson, lead director, Doug Forrester, and myself were involved with, called Newmarket Gold. Newmarket was a successful deal. We merged that company with Kirkland Lake Gold. it went on to have tremendous share price performance. I think it went up plus 10x post that merger. So we're always looking for ways to have share price performance and appreciation. That's why we're here. That's why we're working hard for our shareholders, and we're all aligned with shareholders as well. Personally, I have a significant position in the company. Probably over 75% of my net worth is in Calibre, as well as Darren as well. So we're aligned, but it's important to note that we've done this before. We've built companies. We've got a track record of successful mergers and acquisitions. But Darren himself, 30 years at Newmont, his role there evolving year over year to look at ways to optimize assets in the Newmont portfolio, streamline assets, reduce costs, and he did that in many, many jurisdictions. He worked in Nevada, he's worked in Peru, he's worked all across Australia and Indonesia. So a tremendous skill set, expertise, leading Calibre as we develop Valentine and continue delivery on our operations in Nicaragua and Nevada, as well as, of course, leading the growth of the company through exploration. And we've got all the right people in place to do that. In terms of valuation, I think we have a pretty attractive product at this point in time. But you can see here, based on this potential for re-rate and opportunity, there's a lot of upside here. We have in this peer group, one of the most attractive growth profiles, a very attractive enterprise value to ounce of production perspective. So we're trading about $5,000 per ounce of production. The average is 7. The top quartile about 7. You can see the top quartile there is Lundin Gold, a fantastic company that's been delivering low cost, great ounces in Ecuador. New Gold in Canada, as well as Alamos. And it's interesting, Alamos, I don't know their exact production profile. I guess we've got it here about 642,000 ounces. And Calibre over the next little while will be close to 450 to 500,000 ounces once Valentine is full stream. So I do think that Calibre presents a very compelling opportunity. And however, as you go through a major build like we're doing at Valentine, being that it'll be Atlantic Canada's largest open pit gold mine, current initial capital cost $744 million Canadian, which we're fully funded for. There can be hurdles in that process. But right now, things are going very well, and we are on track for first gold in Q2. And I would anticipate that we'll have a pretty steady, gradual ramp up through nameplate at the end of the year. So exciting times for the business. I think it's worthwhile showing another entity, IAMGOLD and G Mining, that have gone through the process of building a mine and then bringing it into production, and what kind of impact that had for their share price performance. G Mining is a good one. IAMGOLD is a fantastic one because last year in 2024, they went through the process of first gold at their Côté gold mine, which is a very large open pit mine in Ontario. You can see March 31st, first gold, they started to see share price performance. And you can see as they went into the nameplate ramp up to that commercial production, that they also saw that performance. Now, obviously, lo and behold, the gold price was beneficial to that outcome as well, because gold up over 25% in 2024. But I think that we're into a very positive, constructive market for gold. It seems already in 2025, I think we're up over 12% for the year. In the face of a stronger dollar, and what it seems like even still higher rates from the Fed, keeping the rates where they are. So interesting times. But Calibre this year, as we develop Valentine, potential opportunity for a re-rate as we bring in a new mine and ramp that up to nameplate. I can't say that it'll be the same as IAMGOLD. I think it would be great if it was. But this is an example of what could be with mines coming online. How are we doing for time, Arlen? I've been through 6 slides now.
Yeah, no, you're doing good. I'm gonna jump in about 4 minutes with some Q&A. So keep going.
Excellent. Like really what I wanted to do here today was give the highlights of the company, and we've kind of been walking through that, but here's an image of the whole portfolio. I've given the guidance. A lot of this is based on analyst consensus numbers. You can see on the right-hand side, but over 4 million ounces now in proven and probable reserves, a significant measured and indicated resource base, and all eyes on Valentine as we advance that to first gold here in the next little while. I also wanted to highlight on the right-hand side here of slide 7, our diversification now. With Valentine, I mean, if you think back to Calibre, 2019 through basically 2023, 24, really, our net asset value was centered around Central America, Nicaragua. Now, with the inclusion of the Canadian asset, we have significantly diversified the portfolio, but still in the mid-tier category, which I think is important to be able to manage that business. You don't have too many assets and too many people. This is a manageable business, particularly for Darren. I think his last role at Newmont was overseeing 14,000 employees, 7 major operations for Newmont. And I think it represented about 45% of Newmont's EBITDA. So a nice diversified portfolio with the inclusion of Valentine. I won't go through where we're at with Valentine. Needless to say, given that we're at, talking about first gold in Q2, that's right around the corner. So we're getting through final details here. Just an image of the site there. Images here to show the progression. We've got the SAG mill, the ball mill on the left-hand side. A lot of activity happening within the plant here. CIL tanks on the right-hand side, and overall mill building complete. So heading in the right direction, on time, on budget. Importantly, I guess before Arlen jumps into questions, we've put out some news over the last little while that's been very positive for this asset. What we've been doing is doing confirmation or blast hole drilling, 9 meter by 9 meter spaced or controlled drilling at the Leprechaun and Marathon pits. Both of them have demonstrated upside. So in the top there, we talk about Leprechaun. Leprechaun is the 3rd pit down to the south here. Based on that drilling and based on the analysis against the 2022 mineral reserve, we're seeing 30% more ore tons, slightly higher grade, 1% higher grade, but in that same volume of rock, 8 million tons tested against the 2022 model, we're seeing about 30% increase in metal. So the tighter we drill the deposit so far, we're seeing more and more grade and more ounces. The same with the Marathon pit, albeit it doesn't have as much volume tested yet, but based on results we put out in September last year, you can see there are significantly higher grades, resulting again in that volume tested against the 2022 mineral reserve, about 44% more ounces in that volume in Marathon's pit. And then we transition to exploration upside. Obviously important for any gold investor. What else could they find? Well, as I mentioned, we're doing over 200,000 meters of drilling across all the portfolio. Probably 75 to 100,000 meters drilled at Valentine this year. Again, focused purely on exploration, discovering new, what could be the upside of this belt. 32 kilometers long. Marathon Gold had tested about 7 kilometers of that belt. And within a year of owning the assets, Calibre's made a very significant new discovery southwest of the Leprechaun pit, and we show it in the bottom here. I'll go to a bit of a larger zoomed image. You can see the Leprechaun material on the right-hand side in that pit design. On the left, initial drilling. So again, this is just initial drilling that we have put into this new discovery. I talked about those broad widths in the bronze color there. On the red, these are results we put out this week. So what is this demonstrating? It's demonstrating the potential for another pit, but importantly, those initial results in November were deeper. You can see about 250 meters, 200 meters below surface. Well, now we're starting to trace the mineralization closer to surface and at surface in some cases. So it is looking like it's evolving into a potential another open pit. 2 active rigs operating there now. We've got a 3rd coming in March, and we'll gradually increase that drill rig capacity as we finish construction the camp accommodations free up and we can add more exploration team to the site. So very exciting times for the business, growing gold producer, lots of exploration underway. And I would say that all eyes on Valentine as we get to first gold in Q2, and then stay tuned for lots of exploration from all of the portfolio.
Yeah, I actually had no idea how big your belt was to look for more gold.
And that's a good one because
Yeah,
the drilling has been 7 to 8 kilometers of a 32-kilometer shear. You know, if you put that in context, you look at the Abitibi in Ontario, something along 30 to 40 kilometers in the Abitibi has probably produced 100, maybe 100 million ounces of gold in a similar geological setting, whereas Valentine's only had 15 years of exploration versus the Abitibi, maybe 100, 150 years of exploration. So there is a tremendous opportunity here.
best place to find a gold mine is near a gold mine, right?
Indeed.
Yeah.
So it's exciting.
We're going to be open to some questions here. We only got a couple minutes left, Ryan. Got one here. Probably an opinion question. Why do you think companies like Calibre, or gold companies like Calibre, continue to be so undervalued versus gold hitting new highs by the week? And this is a pretty broad question, but what's your opinion?
Yeah, I mean, we could probably talk about this for a long time, but
go down the rabbit hole.
you know, the thing about commodity investing is it is cyclical, right? I mean, you know, we've gone through a couple of cycles here. From 2000 to 2010 was a major cycle. Gold went from $250 an ounce in 2000, and it ran up to $1,900 an ounce. And then it all of a sudden rolled over and came back down. Came back down, I think, to close to $1,000 an ounce again. So what do you think happened to those gold equities when they were trading at a premium valuation to the gold price back in 2010? Well, they decoupled and came crashing down over a period of time. So I think there's a general concern, not a concern, but a conservatism that goes into investing in gold equities, because a lot of times gold equities and management teams have done kind of crazy M&A transactions that have you know, been detrimental to share price performance and have to write off assets over the last 10, 15 years, but also with the cyclicality nature of the commodity, and every commodity, it's not just gold. But in gold's case, lower prices means lower revenue, which means lower margins, which means lower earnings. And then there's obviously more attractive sectors to go to.
Yeah, and lower interest at the time.
Exactly, and tremendously lower interest. So I think it's just a matter of time. I really do believe that. I mean, this time around, we've seen investors going to more junior mid-tier producers first, and not the behemoth larger gold producers. And actually, in fact, I'm seeing a lot of investors go to ETFs. Instead of stock picking, they're just going to go to a passive ETF to get that leverage to gold. But even ETFs have had outflows versus inflows as the price of gold has been rising. So I think we're getting closer and closer to a point in time where you're going to see a rush into gold and gold equities because of the margins now. And I also believe we're going to see higher gold prices.
Yeah, I'm certainly a big believer in higher gold prices. I think I said if your target's $3,000, your eyes are blind. It feels like we got quite a setup right now for the gold and silver precious metals sector right now. So, Ryan, thank you very, very much. Your time is up today. Appreciate you being on the show. Good to see you, and looking forward to seeing you guys pour first gold there. That's awesome.
Yeah.
Well done.
Thanks very much, Arlen, and I appreciate the time.